We are in the crypto macro spring to summer transition. That is when liquidity starts coming into the system. It happens to correspond with the US election cycle, because obviously politicians can't help but give out candy around election time.
Yes, of course.
It's also the Bitcoin halving time. So Bitcoin halving reduces the supply. And then there was the ETF. So basically, we've got a perfect setup of liquidity, plus new demand, plus reduced supply. And so the rest of the year should play out the same way. I mean, I continue to be very bullish this year and very bullish for most of next year.
Renowned financial visionary Raoul delves into the profound significance of the Bitcoin halving, shedding light on its transformative influence within the cryptocurrency realm. Pal offers an insightful analysis, elucidating why Bitcoin transcends mere digital currency status, asserting its position as potentially the most exceptional investment opportunity humanity has ever encountered. Spot Bitcoin exchange-traded funds have pushed Bitcoin to record highs this year. According to Santiment's latest analysis, the volume of spot Bitcoin ETFs has remained strong, showing no signs of slowing down even 4 weeks after reaching its all-time high. On Monday, April 8th, Bitcoin rallied 2.73%. BTC revisited the $72,500 handle for the first time since March 14th, before ending the session below the $72,000 level. According to Raoul, we are currently experiencing a transition from the crypto macro spring to summer. This transition marks the influx of liquidity into the system, coinciding with the US election cycle. Consequently, Powell remains optimistic about the market outlook for the remainder of this year and most of the following year. Now, the clock is ticking on Bitcoin's halving, and it appears the ETF mania has accelerated the timeline of its arrival. Over the past 3 cycles, the halving has been about the vast volatility spike. Anticipation grows as Bitcoin halving is expected to happen sooner than expected on April 18th, raising concerns over a soaring volatile scenario in the cryptocurrency market. The Bitcoin halving has historically catalyzed price rallies, driving Bitcoin to new all-time highs. However, past performance does not guarantee future outcomes, and market experts caution against over-reliance on historical patterns. Powell highlighted that the reduction in supply coincides with growing market participation, creating a situation where demand escalates while the available supply dwindles. Ready to uncover more insights? Remember to subscribe and turn on notifications always to get our latest content.
Bitcoin is basically a share of a network. The more people who join the network, the more value goes up. So as the ETF brings people in, as people start fearing the governments and their deficits, they start looking for different solutions. One of the reasons gold has been rallying is the same. So what we're seeing is this was the most successful launch of any ETF in all history, which tells you it's not just an ETF. It's that the idea of Bitcoin itself is resonating with people. They kind of know they're getting screwed somewhere by the system, and this feels like a way of getting higher returns with more volatility, but it kind of saves them from what is going on. So let's assume that this is the largest ETF launch in history, and a lot of newbies have come in. Well, it's happening at a magic time. The magic time is what's known as the Bitcoin halving. So new Bitcoin comes onto the market via miners, Bitcoin miners, who undergo huge kind of mathematical calculations to produce a Bitcoin. There is a fixed number of Bitcoins that can be produced each year. So it's a competition to produce them. So you need a lot of computing power. And then every 4 years, the algorithm of Bitcoin itself halves the number. So if there were 100 Bitcoin being produced by miners every day, whatever the number is, right now, after April 20th, it goes to 50. So there's more people coming into the market, which is new demand, and new supply is shrinking. So all the time, the only supply is really sellers of Bitcoin who hold Bitcoin right now. But Bitcoin's one of these weird assets where 80% of all holders just hoard it. Like you and I, we just don't do anything with it, we just hold it. And so there's really only 20% that's available for trading. So that mechanism is driving the valuation up of Bitcoin over time. Now, it also means that people start to see this asset going up because there's less supply and lots of demand, and it joins more and more people. Because this asset is the best performing asset in all recorded human history. Bitcoin itself has done 20 million% since 2012. It has produced 150% annualized returns since 2012. Ethereum has done, which is another cryptocurrency, about 170%, and Solana 190% or 200%. So this asset is by far and away the greatest performing asset in all of humanity. And that gets people's attention, obviously, when people's returns have been low and people can't get out of the wealth trap.
Bitcoin's ultra-bullish periods, followed by significant crashes and subsequent bullish periods, suggest it is not a speculative bubble. Instead, it's a volatile asset class gradually gaining mainstream acceptance. According to Arthur Hayes, co-founder of BitMEX, the upcoming Bitcoin halving combined with the actions of the Federal Reserve and Treasury will contribute to a significant decline in the cryptocurrency market for several weeks. According to Powell, it's essential to understand that bear markets can happen to any investment, even Bitcoin. However, Bitcoin's tendency to magnify market swings could work to reduce extreme ups and downs. So while future downturns are possible, they might not be as severe, around 45 to 50%. Now let's redirect our attention to a video.
What is not priced in is the liquidity cycle that comes around the same time. Around election years, as I mentioned before, we get a lot of liquidity coming in, and people aren't very good at forecasting now. Even though everyone knows about the halving, nobody figures about liquidity. So they kind of take current market conditions and say, well, if you remove the supply, everything will be fine. But what actually happens is because liquidity comes into the markets, demand starts exploding at the same time as supply. And it always takes everybody by surprise. Now, it's not a one-day event. It's not like suddenly you wake up on the 20th of April and Bitcoin's up, 50%. It tends to kind of chop around that period because people are like, well, it's in the price. And then before you know it, by June, Bitcoin's at 85, 95,000, something like that. And then you're off to the races, and then there's more demand comes in, because remember we talked before that as price goes up, as number go up, more people get involved, and there's less supply. So it starts to get really reflexive. So it kind of gets really squeezy, and that goes on for a period of time, usually about a year and a half after the halving.
Did we just experience our last bear market in crypto or Bitcoin specifically, or are there future bear markets coming?
There's bear markets in all assets, and this is just an asset. And it's a very reflexive asset, so it tends to over-exaggerate the moves. But there is a good question within that, is the severity of the downside markets that in Bitcoin were classically 80%-ish. Last one was 65, so it was less than others. Is that changed because of the ETF? Well, obviously, many of the ETF holders faced with their first round of volatility in the space will panic out, much like everybody else, but that's fine. But I think there's going to be a bunch of the millennial cohort who are going to put it in their 401k. And that's every 2-week buying regardless. So my guess is that it'll dampen the volatility to the downside. So next time around, it won't be down 85, it won't be down 75, it won't be down 65, but maybe it's down 45. 50. The real reason, forget all of the complexity of what this is and the technology, forget all of that. Think of why most people have bought gold. It's to protect themselves from the action of central banks. It has proven itself over several thousand years to be a way of having a store of value. Bitcoin is that for a digital age. Okay, most people know that story. They don't understand the other side of the story. Is why does nobody feel as wealthy as they thought they should be? Particularly if you're a bit older, you're like, why are my savings not as much as I thought they would be, or I can't afford as much? Right, that's the big conundrum.
Bitcoin's price volatility for the last 30 days stands around 4%, down from nearly 18% in April 2013. It's starting to look more like a traditional equity. With the upcoming halving less than 2 weeks away, the crypto analytic platform anticipates that the ongoing heightened activity will persist. However, there is speculation whether a subsequent drop-off in ETF volume and on-chain activity will occur immediately afterward. If the halving is so bullish for Bitcoin, why does historical data show Bitcoin crashes within a year following each halving event? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.